This is the worst inflation in the history of the country. Before they fixed it, right, in the 1990s, the CPI represented a fixed basket of goods. So all they did is look at the price of goods and then look at how much the price changed. And if we were measuring prices today, the way we measured them in the 80s and the 70s, because we want to go back and say, oh, this is the worst inflation since 1981. Well, if we measured inflation today using the same CPI that they used in 1981, that's where we'd probably be at about 17%, not 8.5%. So this is the worst inflation in the history of the country if we measure it accurately. But the government doesn't want to be honest about inflation. It lies about inflation the way it lies about everything. And first of all, they said it peaked a while ago. And so we're higher than where it was when it supposedly peaked. But it's as peaked as it was transitory. And there's no reason to believe that it's peaked. Think about where interest rates are. Even though the Fed is talking about raising them, they're still at 25 basis points, 0.25%. The last time inflation was this high in 1981, interest rates were at 20%. So we're not even close to 1%, let alone 20%. So inflation is not coming to an end like it was in 1981. It's just getting started. This is like 1971, not like 1981. We have a long way to go. We're not even close to the peak of inflation. Well, the interest rate should be above the inflation rate, the real one. But if even the fake one is we can't go above 8.5, people aren't lending money to lose on purpose. You have to have a real return that exceeds the rate of inflation. And, we're not even close to that. But the reason that the Fed is not raising rates significantly to fight inflation is because it can't do it, because we all have so much debt. But the reason we have so much debt is because the Fed could never raise rates in the past, because every time they tried, the economy would go into recession, the markets would tank, and then it'd have to go right back down to zero and do a bunch more quantitative easing. So the economy gets more and more addicted to cheap money every time we get a bigger dose. And now they're claiming that we can go cold turkey on the cheap money and nothing's going to happen. I mean, the economy has never been more vulnerable to a rise in interest rates than it is right now. And we've never had more inflation than we do right now. So higher interest rates have never been more necessary than they are right now. But we can't get them without collapsing the economy. So we won't get them. We'll have massive inflation instead, which will do even more damage to the economy than a collapse. And not only do they have to raise interest rates, they have to dramatically reduce the money supply. They have to reverse all this quantitative easing. They have a $9 trillion balance sheet. It's very confusing because the whole term is a lie. But what quantitative easing really is debt monetization. That's when a central bank, the Federal Reserve, prints up money and buys government bonds. And so they put new money into circulation. They are inflating the money supply. That is the very essence of inflation. Whenever the central bank says we're doing quantitative easing, what you should actually think they're saying is we are causing inflation. And that is what they did. And the consequence of that is that we're all paying higher prices. But if they want to get rid of the inflation, they have to shrink that money supply. So they have to do the opposite of quantitative easing, quantitative tightening. They've got to sell U.S. government bonds and then take the money they get and destroy it so that the money supply goes down. The problem is, who is going to buy all these government bonds? Because up until recently, the Federal Reserve was the biggest customer of the United States government, because the Federal Reserve was the biggest buyer of treasuries, helping to finance the deficit. Well, if the Fed goes from being the Treasury's biggest customer to their biggest competitor, if the Federal Reserve is competing with the government selling treasuries into the market, who is going to buy all these treasuries and where is the money going to come from? The answer is no one's going to buy them. The price has to collapse. That's why interest rates are rising every single day. We just hit 2.9% today on a 30-year, 2.8% on a 10-year. These are the highest rates have been since COVID. But they're going up every day because nobody wants to buy treasuries. So every day, more and more treasuries get sold. Rates are going to keep going up until eventually the markets crash, and then the Fed is forced to pivot on its stance and go back to we can't hike rates, so we can't shrink our balance sheet. And that's when inflation can really kick into a higher gear. As bad as it is now, it's going to get much worse. Because remember, if the Fed is going to do quantitative tightening and sell treasury bonds, the U.S. government, the Biden administration, is going to have to dramatically reduce government spending. Not just reduce the rate of increase, but actually spend less than they did in the past, and actually spend a lot less. The budget deficit is projected to be $2.5 trillion. Now, it's probably going to be over $3 trillion if they're projecting 2.5. But how are they going to sell $2.5 trillion worth of treasuries when the Federal Reserve is also selling hundreds of billions worth of treasuries during the same year? They can't do it. So the federal government is going to have to dramatically cut spending so that it doesn't have to borrow so much money, or they have to have a massive tax hike on the middle class right now, effective immediately, maybe double income taxes on the middle class, which, I mean, clearly they're not going to do. They're not going to cut spending either, because they'd have to cut Social Security, Medicare, all the entitlements. I mean, they're just expanding Obamacare. We're broke. The Fed is raising rates, and these idiots just voted to spend even more money on Obamacare, and we can't even afford the money we're already spending. So it's never going to happen. They're just going to keep on printing until they destroy the value of the dollar completely. And as I said, prices are going through the roof. They have just started. They've only just started going up, and they're going much, much higher. I think in an inflationary depression, I mean, it could end in hyperinflation, where the money has no value whatsoever and you can't buy anything. No matter how many millions you have, there's nothing that you could buy because no one will sell you something. But if we're going to stop that from happening, then we're going to have to suffer a severe collapse, a financial crisis, far greater than anything that we had in 2008. And nobody gets a bailout from anything. No banks get bailed out. They have to fail. And in fact, when they fail, the depositors are going to lose their money, because there's no FDIC money either, because that would have had to come from the Fed. So depositors lose their money, companies go out of business, investors get wiped out, jobs get destroyed. It's going to be a real mess in the end. That's why they're waiting so long and kicking the can down the road for as many years as they have, because the consequences are so horrible, nobody wants to face them. But every time we kick that can down the road, we make those horrible consequences much worse. Mm-hmm. So since we've been doing it for so long, you can only imagine just how horrific things are going to be in order to avoid hyperinflation, which would be even more catastrophic. And right now, the dollar's been very strong against a lot of other currencies, in particular the euro. Wasn't just a ruble. But I think that dollar strength is eventually going to reverse as well. I think the dollar is going to come under a lot of pressure when the markets realize that the Fed is bluffing about its ability to fight inflation, and that when the markets, figure that out, and the Fed is ultimately forced to reverse because of the weakness in the economy and the markets, I think the dollar is going to tank across the board, including against the ruble. And now that Putin has kind of fixed how much gold the Central Bank of Russia is willing to buy, priced in rubles, if we see a very weak dollar in terms of rubles, that will put a lot of upward pressure on the price of gold, because a lot of Russian banks will be buying gold that they can turn around and sell to the Russian government at a profit. And the strength in gold will also accelerate the decline of the dollar and feed the whole process.